Hello, and welcome to What's Next Wall Street. I'm Georgia Alfredas, and this podcast is all about stocks, the metaverse, crypto, and the new decentralized financial Web3 world around us, and what all that means for traders. Dave is out this week, but I got you. I got all the hot new trending products that everybody's talking about, using and investing in. Plus, we got Greg Krause, our boy, lead instructor at OptionsPlayers.com here with his expert analysis and insight to help you target investment potential. So the goal here is to provide you with education, info, and tips so that you're not out here just trading like all willy-nilly. We want you doing it right, okay? You can email us at OptionsPlayers.com or hit us up on social media at What's Next Wall Street with your questions and your comments. We can also direct you to instructions over at OptionsPlayers.com. They're like major experts over there, like Greg, who can help you come up with a tailored trade plan. Really important. Okay, watch this and past episodes on the Options Players YouTube channel or listen to our podcast on Apple, Spotify, or wherever you get your podcast, and make sure you subscribe, hit that alert button so that you always know what's next on Wall Street. Okay, if you are planning to travel someplace extravagant this holiday season, or even just through the woods and over to grandma's house, word to the wise, book early, like as in now. Sources say holiday airfare is expected to be more expensive than it's been in 5 years. Your domestic round trip ticket for Thanksgiving could cost you over $350. That's 20% more than it was pre-pandemic, while Christmas is going to cost you even more at around $450. That is a 30% increase compared to pre-pandemic prices. Speaking of traveling, in 5 or 10 years, our airspace is going to look like a futuristic movie. Do not laugh. When we were little kids, self-driving cars and smartwatches seemed crazy, right? Look at us using FaceTime. Look at us now. United Airlines is getting into electric aircraft. The company's purchasing 200 electric air taxis from Eve Air Mobility with the option to buy 200 more. Now, United says they're going to help reduce carbon emissions by replacing car trips once the aircraft comes to market, and they expect delivery of that electric taxi as soon as 2026. The future is happening, guys. The U.S. has recovered over $30 million in crypto taken by North Korean hackers earlier this year. So $30 million is a lot, I know. But how about it's only a fraction of the $620 million value at the time it was taken in March? A cybercrime organization associated with the North Korean government stole the funds from players of the virtual pay-to-play game Axie Infinity. Cray, right? Now you can get an NFT with that vanilla frap. Starbucks is launching a new Web3-based digital community called Odyssey, where Starbucks members, i.e. customers, and partners, i.e. employees, can earn and buy NFTs that will unlock access to new immersive coffee experiences. Sounds cool, right? I mean, you're spending $1 billion there anyway. You might as well get NFTs, right? That's what I thought. Except there's already a wait list. And yes, of course, I'm on it. Study the game, know the rules. Today's pro tip is a simple one brought to you by OptionsPlayers.com. Put effort into your craft and learn as much as you can about it. You think Meryl Streep got Oscars because she just read the lines on the page? Absolutely not. I threw that analogy in and I see how that just didn't work. Okay, well, anyway, how about I pretend I'm Meryl Streep and stick to the Options Players script here? Okay, back to it. A lot of traders treat trading like a casino and just get into trades for action, but if you spend some time and effort learning the space or vertical you plan to trade, you will see much better results. Effort in, gains out. Thanks, Options Players. That's a good one. All right, y'all, this is the part of the show where we get to hear from you. Send your questions and your comments to www.optionsplayers.com, or you can hit us up on social media at What's Next Wall Street. Stephen A. from OptionsPlayers.com or Options Players Community has a question about Greg's live stream. It reads, with regards to Greg's live streaming account, where he started trading live on the feed with $125 and got it to $14,000, what were his first 10 trades like and his first 50? Good question. Greg?
Yeah.
What you got?
Well, first off, this was kind of new because having a small account and having issues. So normally I don't have to worry about pattern day trading rules or anything like that. So with just $100. The trades were, I kind of waited for them to get up using a 3-day VWAP until they got extended and then came back in, and then I traded that. Now, we were normally, if you hold on to those, you're going to be right by a lot or wrong by a lot. Luckily, we were right by a lot. Now, if it started going against us, we'll get out. And we did the first 10 were all about that, 1 trade a day, probably. And then now we're at 16,000. We've made about $300 every day. Now our trades are pretty much completely different because I don't have to worry about running out of capital because we're using a cash account. So we're not using spreads, just what we call naked options. So just buying a call or buying a put and selling it. It's kind of easier for people when they trade that way, especially when they're new. So now we get in using what we call the sauce, or still same little VWAP scenarios there. But I'm not holding it as long. So I'm getting in and then I'm getting out when I make 10 cents a contract, and 10 cents a contract is basically $10. So now I'm using about $1,000 a trade, maybe a little bit more. And then on Monday, Wednesday, and Friday, because I'm trading same day expiration, on Tuesday and Thursday, it's probably, $2,000 a trade total risk. But you're not going to lose all that unless something crazy happens and the price drops like, 30% immediately. And then I'm only trying to make 10 cents a contract. That could be a very small move. Like I'm talking, it could happen in 1 second. It can happen in 2. So for me personally, when I'm trying to scalp, and that's what this streaming account is for day trading, scalping. I'm not trying to hold it for a long time. And I try to make people look at how they trade and then look at where their losers are. For me, for instance, whenever my average hold time for a winner is only 3 minutes, my average hold time for a loser is like 6 minutes. So what does that tell me? It tells me anytime I go past 3 minutes, I need to be thinking about getting out, because I know, hey, whenever I hold longer than this, I lose. So I look at the numbers. And it's that kind of case where we thought this was going to happen. It does happen. And then we make our money and we're happy. But then you get in that psychological thing where I make the trade. It's not doing what I want to, but I think it's going to happen. So I hope, I shoot some hopium in myself. Mm-hmm. And then I'm thinking it's going to work and then it doesn't. And then I like, okay, maybe it'll work now. Maybe it'll work now. And we've all been there. Sometimes we get lucky and it works, but most of the time it just runs completely against us. And then we're looking back saying, why didn't I, get out of this? So that's kind of what we do now, or what I do is I focus on getting in areas where there's a potential for it to really run in one direction really quick. And then I get out. And you can ask anybody in the stream that normally when these I wait for these to happen and I'll get it and I'll get out and I'll make $100, maybe $50, maybe $35, depending on where I'm at on the day, just in that one trade. And I'll get out and then it'll just keep going. And if I would have stayed in, I would have made like $500, but I don't care, because sometimes it's the same way. You don't remember about the ones that, hey, if I didn't get out, I would have lost money. But like I said, we're doing that. We're up to about 16,000 now. So we're doing that about 16 times a day, trying to average, somewhere around $50 a trade profit. Now, some of those are going to be losers. So I try to limit it. My losers, if it gets above 50, which is about my average win, I just get out if I'm down that much. So we kind of just really quick now compared to before. I'm in and out, in and out, in and out.
So let me ask you something. You started with the 125 and now you got it to like not even 14, like 16,000. How long did it take you to do that? Has it been like a year? Like how long did it take you?
We started, I believe, at the end of March. So April would have been the first day that we started, but I do believe we started at the very end of March, like March 27th or something.
So like 5, 6
yeah,
months?
I mean, it
That's
is
crazy.
what it is. I mean, everybody thinks you got to make all this money and you see everybody's like, I made 100%. Look, yes, I've made maybe 100% on a few things, but they weren't like a crazy amount. Like I shorted bonds with TBT, which is you're basically shorting bonds. As yields go up, bonds prices go down. So I was shorting that in a longer term play. Actually, I made 100% on that, and I think I made maybe 100% on maybe like 2 other trades. but they were only for like $100. I made like $100 on them. So I'm just normally in and out. If I make more than 20%, it is luck. I'm talking it just ran. My computer shut off. I forgot I had it. Something happened that I just let it go past where I thought it was going to go. But it really comes back to is, can I make $100? If you can make $100 a day, right? Let's just say there's $20 or 20 days in a month that you could trade. That's $2,000. Right now, I want to make more than that. Our goal currently is to make $5,000 every 2 months, right? So just above that $100 a day average gets me to that $5,000 every month. And that's my goal. If I want to make more, I could put more into each trade and risk, but I'm trying to say, hey, I can do this. I can spend $15,000 a day in trading, right, to make $100. It doesn't sound like I'm winning, right? I made $100, but I had to trade 16,000. Right. So a lot of people look at that and they say, well, that's not very good. That's not even a percentage. Well, I do that every day, over and 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 over. And although I used to do it when it was 5,000, right, I had to put more risk. But now that we're at 15, 16,000, I don't have to risk as much to get that money. So as you do get more money, it gets easier to make it. You could trade more in the money stuff than out of the money. But the whole goal is to get from $100. It was just a throwaway account that I had somewhere. I had like 125.90, so basically 126 in it. And it is what it is. The whole goal is to get it to 25,000 by the end of the year. You're
dang close.
Yeah,
slow and steady wins the race.
Pass it.
Wow. Okay.
What's up? Yeah, we'll definitely get there.
Okay. All right. Thanks for that. Okay. So Nick S. from Options Players Community writes, I noticed that stocks typically tend to run up going into their respective earnings. The price increase along with the volatility increase or extra premium. Does this combination allow swing traders to capitalize heading into earnings? If so, what are ideal parameters for the strikes to enter, expiration, delta, et cetera?
Yeah, so I think we actually discussed this probably in a few shows ago. So the run up, let's not take away from the price movement. Okay. Let's just talk. So we're talking about volatility initially. So it's getting more volatile. So people are betting on it to move up and down because of the the event. You can buy when it's low volatility, and then those options can go up in value faster due to Vega or the sensitivity to the change in IV over theta or your theta burn. Time costs money. So as an options trader, you can just buy and nothing happen in the price. Now, some stocks do tend to run up to ER, right? And there's plenty of scans out there that show you, hey, these run up to ER, these stay flat, these underperform. They're all out there. I'm not going to, if a third party wants to, give a commercial to you, maybe I'll plug them or something if I like them. But there's plenty of them out there that do this, that give you the stats. But you can go back and look at what the price has done through different markets. So don't just look during a bull market or a bear market. Say, okay, this is when volatility starts to increase, and then there's a run up. Now, the reason why there are run ups, I guess there's probably many reasons why it could. But number one, fear of missing out. Individuals, regardless, like, oh, they're going to do so good, I need to get in now. Well, nothing changed. You thought they were going to do good 2 months ago. You should have got in back then when everybody else did. So now what's going to happen is you're going to put all this money in, you're going to jump the price up, and they're going to come out with these great results, and then the price goes down. How many people were in a stock, especially options, and the company beat on revenue, beat on, earnings per share, they beat everything, great expectations, and then the price dropped. Happens all the time. It's because people overprice. So the fear of missing out shot up the price. Number two is normally dividends are after the earnings. So it could be a week after the earnings, could be a few days after the earnings. A lot of people try to space them out now, but it used to be pretty close to earnings. So nobody wanted to get rid of the shares that they've held for, a few months or years right before an earnings and then to get that dividend. Especially larger companies aren't going to get rid of that. They're just not going to sell before the dividend. They're expecting that dividend would be more than whatever the potential loss would be from this ER. They just don't care about those events.
Right.
So those are two things: is just the run up of expectations and hopium, volatility, and then there's always things around there that make people go up. So they're going to hold on to it because they're dividends and things like that. They're going to sell it.
Okay. All right. Thanks, Greg. Listen, if you've got a question for Greg or for us, you got comments, hit us up on social media at What's Next Wall Street or on our YouTube page. And of course, you can email us at www.optionsplayers.com. Okay, y'all, Zengo is a game changer. Do you hear? I mean, I said what I said and I mean it. Zengo is a simple yet secure crypto wallet. I know what you're thinking. Everybody says their wallet is secure. I'm here to tell you that Zengo really is. Number one, y'all know I don't really like to talk about stuff that I don't use. Number two, if it's not user-friendly, I don't use it. Here are the numbers. In the last 10 years, over $100 billion worth of crypto has been lost or stolen specifically because of poor key management, scams, and hackers. Now, you've heard that whole not your keys, not your crypto. Forget that. Software and hardware wallets both have the same vulnerability. A single private key that can be lost, hacked, or simply misplaced. You don't have to worry about that with Zengo because Zengo is an on-chain crypto wallet with no private key vulnerability, leveraging advanced cryptography called MPC, which until now was only available to multi-billion-dollar institutions. So here's the deal. Your Zengo account is secured by 3 factors, which makes recovery simple and stress-free. Zengo has multi-chain support, so you can buy, trade, connect to Web3 dApps, and store your crypto with Zen. So there are so many features that I just don't even have time to get into, but I have to get this in real quick, okay? Because this is one of my favorite features. With all these fake drops and rogue NFTs, you don't want to fool around and click approve all to an illegitimate dApp. And it's so easy to do, but now with Zengo's clear sign. This technology is so bomb. You literally get a clear sign so that you can have a better idea of whether or not a dApp is legit. I already told you earlier, so much about Zengo is game changing. You have to check it out for yourself. I just can't possibly tell you how cool it is in 60 seconds. I ain't got the time. So go check it out yourself. Get started at zengo.com/WNWS and use code WNWS to get $20 back on your first purchase of $200 or more. Look at that little cute picture. That's zengo.com/WNWS for $20 back on your first purchase of $200 or more. Terms and conditions may apply. See site for details. Okay, so y'all, this is a show about investing, right? And we're powered by Options Players, a community that pushes investment education in classes so that you know how to invest when the market is up and when it's down. So I want to talk about how consumers can diversify their portfolio. And well, I got you here, Greg. I might as well pick your brain. So Greg, we know that we should spread the wealth, so to say, but how? So I typically invest in companies that I know and trust and more importantly, use in my everyday life because I want to support them because if Target goes out of business, I'm lost. If my kid can't come home and watch Disney, I'm done. I'm like, what? So, but I know that's, my husband's always like, stop trading your heart, okay? But what else? I really want a list of 3, okay? So give me 3 tips or more for diversifying my portfolio. No pressure here, Craig. But I know it's a good idea to to invest in things that you use in your everyday life because, you trust that company and you want that company to be around. But what am I missing out on? What should I be, investing in?
We could talk about this until you want to cut off and end the show. It's
got a long list for us.
Broad, right? So first off, you have to understand everyone is different. Okay. And what I mean by that, diversifying, my life is different than say, the person next to me. I am retired. I have passive income in the form of pensions and everything else, plus my stocks that give me dividends. I don't have to work, right? So I can be a little bit more risky. They're in perpetuity. I will get them forever. So it is what it is, right? So now the person next to me might not have that. So he has to, protect that income. He wants to grow his portfolio. So he might need to diversify in other ways. There's just so much. And then you have life insurance. You have
Listen, I heard about
other
somebody,
methods of investments.
I got into a big argument with someone because I was like, whole life insurance is an asset. And they're like, no, only if you die. And I'm like, no, you can, it's an investment. What do you think about whole life insurance? Tell me what your thoughts are.
That is going to be, I need to put a disclaimer in there that I'm not your financial advisor.
Okay.
All right. So insurance, first off, it's a must if you want to, protect yourself and everything, and you can build that cash out. There's just so many types of whole life or that. I think it's kind of a mix that you would need. For example, right now at our age, we have kids that are growing up, going to college, right? If we were to pass away, we would need a lot of money to help our significant other continue the same type of lifestyle, right?
But you could do that with term insurance. You could do that with term. You don't have to get whole.
Exactly. So you would need term life insurance to cover like this short period. And then your whole life, which might take longer to build death benefits and other things up, you can have building that up. So, later on in life, when the kids aren't living with you and whatnot, and one of you pass away or what, you can have that, and then you can pull money from it. First off, I'm just going to say you need to go talk to someone that knows.
I am talking to somebody. It's you. Go ahead.
Well, I don't know your exact income. I don't know what your plans are for retirement. I don't know all this, your assets. So it's a whole different story. Nobody can say you should do this or you should get this. They have to know the whole, I guess you could say the holistic approach. They got to have all that information.
Okay.
And a lot of people look at financial advisors as the person that works down here is this guy that's going to try to get your money. Nah, look, he wants your money because he's going to make a percentage on what he makes for you. So he's going to do everything he can to make you money and not lose it. So find someone that, works for a nice little company. It doesn't need to be no mom and pop shop. I wouldn't trust them with my money, but you can go out. I'm not going to, give someone a free commercial, but there's plenty of them out there. Go find you a broker or whatnot, sit down with them and find out which one that you agree. Now you have to understand these are going to come with things called a budget, but it is what it is. You don't have to really stick to the budget, but that's what they're going to base it upon. But let's talk about diversification of a portfolio.
Okay.
First off. Okay. So the whole goal of diversifying a portfolio is to limit systematic risk or macro or unsystematic risk. So small things that might affect this sector, but not affect the overall market, right? Because they say you can't diversify systematic risk, which means you can't buy a bunch of different stocks and then the market crash and your diversification is crap anyways. Everything's going to go down, right? That's systematic risk. So systematic risk minus free rate is, a bunch of finance nerd stuff, but you can't get rid of all risks, systematic risk especially. But you can diversify by buying a little bit of banks, a little bit of tech, a little bit of pharmaceuticals. Well, we have something that just does that for us, right? We don't need to go anywhere. You can go buy the S&P 500. It's already diversified. You can, if you want a little bit of tech added into that and you want to be more, risky and add a little bit more better growth or something like that, go look at the Qs. If you want a little small businesses, you can go look at like the Russell 2000 or something. They're already made there. So you don't have to be this genius in trying to figure out what's my beta, what's my systematic risk, all that. You don't need to know that. You just go buy the index funds. That's normally what I'm going to say. And then if you want to buy one that you like you said, you like Disney or something like that, and then you can go purchase that. I would just say don't rush to get it. For example, Disney was like at $200 not long ago, and it came down off of that. And that was kind of common sense. Most people, I don't know why Disney went up that high. Everybody thought Disney Plus was going to be this magnificent moneymaker, and it's doing good. But the problem is we already see that it's just not going to be as profitable. Disney has been around forever, and Disney made more money on their TV shows and commercials than they did anything else. And what does a streaming service take away from? It takes away from TV and commercials. Right. So you kind of bastardize yourself there to grow for the future. I understand that. So the valuation people started giving them to compare them to Netflix or somebody like that was, it was kind of stupid because, you know, that is Netflix. You know, if Apple does it, it's not bastardizing something Apple has already had. You know, they're taking a market share in and adding a revenue with no decrease in a revenue. Versus them, they were cannibalizing one of their sectors for another one of their sectors inside their own company. So, you know, you can buy Disney because you like it, and that's good. Now, diversification or diversifying your portfolio, I want to look at it as not your portfolio. Like I said, there's multiple things you can do. So how do you get rid of systematic risk? You got to change the things you invested in. Now, if you go look on like investor.gov, it's a government website, but it will tell you the definition of, you know, diversification is don't put all your eggs in one basket, right? In quotations on their website. But that's essentially it. Why am I going to throw all my money into the market when everything's correlated, right? If Apple goes bankrupt, that's going to pull SPY down, right? It's going to probably hurt everybody else. And I'm not saying Apple's going to go bankrupt, but you know what I'm saying? Everybody's going to be affected by it. Yeah. There's a large risk there. Almost everything is connected. So how do you do it? Well, I have my stocks that I'm purchasing in the companies, and then maybe I have some for bonds. Those bonds can be treasury notes. For example, right now you can go, I'm not going to pull up the actual rate as today, although it only take me like 20 seconds. You can go buy I-bonds from the internet and get basically at 10% in a year.
Wow.
You can't beat that. Free money from the United States government. Up to $10,000 though, right? So everybody can go get up to $10,000 and an I-bond, 10%. You're not going to beat that anywhere.
Amazing.
Right? That's better than what the market's going to give you. All right. And then there's other things. You can invest in municipality bonds or your MUSIs, which are your local ones, which are also going to be federally tax-free. So you won't actually pay taxes on those either. Now, some state taxes. So you have to understand maybe those only pay 5%, but now I'm not paying taxes on them. So those are really good for older people that are in retirement, don't want to pay taxes. There you go.
Right.
And then you have things like people purchasing houses. All right. And I'm not out saying go spend all your money on a house, but it's a way you can diversify. Right. So when the stock market goes down, what does the housing market do? It normally goes down with it because nobody can afford it. But over time, that asset just continues to build. So instead of just looking at, I have to only be in the stock market, just understand, you can go buy whatever you want. Like my kids' little playroom in our collection behind me that you always see, right? I mean, just on this wall, Pokemon, there's $30,000, right?
Wow.
And that's not even the ones that are locked up in the safe.
Take all that.
So, I mean, and I promise you, it's not an investment. I didn't say, hey, let's collect these for investment, but it is what it is. So there's so many ways you could diversify it. Just don't put your eggs in one basket and don't look at it just like, oh, what stock can I buy or what can this? There are so many ways to invest your money. You can invest in yourself through education, right? You want to know how to make more money? If you're at a job right now, so let's talk about, you want to build wealth, right? And this is probably off the topic of diversification, but the whole point is to make money, right? That's what we're ending. That's what we're trying to do in this diversification safely. A lot of people, to save money and to invest it, they'll do one thing. They will make a budget and they'll pinch their numbers, right? So, but you can only budget so much down. You can only lower the cost of things by so much. So you might say $500 a month and you can invest that. So now you got the one way is to increase the income coming in. That's always tell people, get a budget, live by that budget. So when you get more income, you don't blow it and you can put that away. But then how are you going to make more income? It could be a hustle. I don't care. You're going down the street, mowing extra yards, make 100 over here, picking up a shift at a hotel as a bartender, make whatever you like. If you're an artist, you make some art and sell it on the side, whatever it is, you try to make a little bit of extra money. And then that goes into your savings. That's that hustle. Number two is find out, if I'm here at my job, how do I get to here? Regardless of what that is. If that's a promotion within the job or a move to another job or forbid you go start your own company, which I promise you, you're going to be making this and then go down here. It just might be, more better. I mean, at first. So, and that might be, hey, I need to go get a different education. Maybe I need to go get my MBA or something like that. And that would just give me more money. Just know you need to understand, like, hey, if I get my MBA and I can get, and I've already talked to my bosses, when I get that, I likely get paid this. You got to go back and say, okay, this MBA is going to cost me $15,000 to get, but I'll make 10,000 extra a year or something. And that's what you need to focus on right there. So you're actually spending your money, diversifying it on yourself, so you'll make more money in the long term.
I love that.
Yeah. So don't just think about it as, I'm just going to put this $10,000 away, right? I have degrees out the wazoo on walls in this house, and I don't do anything with them. Like, never done anything. I was a grunt in the military, worked for a broker for a little bit, and then worked for some commodity markets, and then nothing. But none of them ever asked for my diplomas.
Isn't it weird? You spend all this money going to school. Nobody's ever asked to see my diploma. Like, don't you want to see it? Look, my parents paid all this money for this thing. Look how cool it is.
Yeah, exactly. I mean, it is what it is. I didn't have to spend no money, or I did, I guess. The military didn't cover all of it, but they covered most of it. And then, of course, extra. But now I go to school for free almost everywhere. And like I said, I mean, it's got to be worth it.
Okay.
For example, don't say Greg told you to go get a degree in underwater basket weaving because that was your
But what if you like
passion.
it? What if that's your passion?
Well, I don't care. I also said it needed to provide money over time. So we're talking about future value of money versus the present value of the money I'm going to have to spend on this education. And there's a difference. You could do whatever makes you happy. But for me, I'm trying to make you money. So if spending your money on that education is not going to make you more money down the road, I'm likely to tell you not to do it. Because number one, I suck because I do teach college. But
don't you do it. Don't you do it. Don't you tell these people not to go get a college education. I only
had 2 classes where I ever learned anything that I was taught.
Wow.
I had one teacher really set me down and taught me some things, and another one that, was kind of the same thing. But it was probably his love for what he was teaching made me want to learn more, right? Everybody else said, oh, here it is, go learn it. Like, what? Yeah. You didn't teach me anything. I could get the same education. What was that Goodwill Hunting thing with a library card?
That's right.
So just understand that your education means nothing in the real world. And all you need is go get that degree and then go see who's hiring you with 0 experience.
Yeah.
And you'll probably realize that, I think we haven't talked about Elon Musk, right? So we'll throw him on here for one thing. And he even said he doesn't look at education. He looks at people that can do extraordinary things through past extraordinary feats. And that's the thing, is you need that experience. Your education will help you get there. But there are so many jobs now where you got to have the education to get it, especially
just
in
to
the
get
government
through the door.
side. Yeah. So maybe you're already working at that company and you could go talk to your boss and be like, hey, I plan on, I want to make more money. If I get my MBA, where could I possibly go in this company? And just talk to them. Yeah. And it doesn't have to be an MBA. I'm just using that example because I teach for a business college. So, that's one thing. And you'll be amazed. I've seen people that work for companies like FedEx, and they are actually loading packages with a college degree and going to get their MBA, and FedEx hires from within, like predominantly within. And once they get their MBA, they're going up to the executive suites, like they're going to go from making pretty good money to a crazy amount as a lower junior executive, but it is what it is. And he has only experience he has is college and throwing boxes.
Yeah.
But, that's a company that does teach you a little bit while you get in there. Other companies, you might need that boss to help you school to get that experience. But yeah, diversify means to me is don't put your eggs in stock market. Put a little bit in yourself, a little bit in the stock market, a little bit in some bonds or savings, put a little bit wherever you want to put it, in a house or into fun. I don't really care. You're not going to live forever. So you're never going to see me telling you to save up this huge nest egg of money. But, so don't try to weasel your way in the market like, oh, I got this stock, I got this stock, I got that stock. None of that makes a difference. If the stock market crashes, all of them crash. And you could be the best person on the planet at calling shorts and things like that, probably still going to get ate up. For example, I don't think the market should be where it's at. I believe it should be way further down than it is right now. But I'm not going to bet on that. You know, I'm hedged. I'm not going to lose money if the market goes down, but I'm not going to make any if the market goes up or down right now, because I have no idea what is going to happen. And the election is right around the corner, and I'm just going to wait until that's done, and then I'll make my decisions then. Before that, and I can't buy property right now either unless it's all cash. So I think, hey, I want all the housings to go down in value. I know some places it's already pretty far down, like certain areas that were really elevated, already down like 20%. So I can't touch that. I don't really care about the interest rate because I just buy cash, and then refinance when it drops maybe. But you know, you got to find it out. And the best way is a good investment / financial advisor that can really look at you, find out what you want to do, and you can go on about it. Even if it is putting money into a hobby, you know, and then making money on the side.
I don't need a financial advisor because that's what you're here for. And y'all heard it right here. He said he was basically my financial advisor. So I'm kidding. Okay, remember that you know what happens? We always go down a wormhole. So if you ask a question, or in this case, like I did, just know we're going there. All right. So listen, if you have a question or you want to talk about anything we've covered on the show, or you want something covered on the show, email us at www.optionsplayers.com or hit us up on social media at What's Next Wall Street. Catch up on past episodes of What's Next Wall Street on Options Players YouTube page, or listen on Spotify, Apple, or wherever you get your podcast. Make sure you subscribe though, okay? And hit the alert button so that you get current trending info as soon as it drops. I'm Georgia Alfredas. See you next week on What's Next Wall Street.